Hey guys, Boris Lasser, welcome to BK Forex Daily Techniques for 10/29/13. As always, trading foreign exchange on margin carries a high level of risk management suitable for all investors. I ask you to read this disclaimer very carefully to understand all the risks associated with trading on margin. Seek advice from an independent financial advisor if you have any doubts. All right, well, very quiet day in FX today. Typical Monday, but really almost exacerbated by the fact that I think the market is just in a stall ahead of probably FOMC on Wednesday. Euro still really struggling at the 38.30. Really, basically, the 38.50 is pretty much cement ceiling for the euro. So um, it resolves probably two ways. It definitely looks like it's a stall, and if we get even a modicum of hawkishness out of the Fed, I think the euro is clearly ready to correct here. If we get a pretty dovish statement from the Fed, I don't know if we will, but let's suppose we do, then we probably do have one more final push here towards the 39 handle as the euro makes another consolidative move. But for now, you really 3 days of unable to penetrate the top kind of tells you that if you can't go up, gravity starts pulling you down. And it looks like momentum is definitely dying out, so some correction is certainly due. So where's support here? Support obviously 37.50 first, but I think that's a very weak level of support. The much stronger level of support around 37, which could be probably the first real serious test, and then another 36.50, which would be a much more significant level of support because that was the breakout level. So can the euro curl up and die? Very much so. We'll have to see how it trades out. The only thing I think left for the euro bulls at this point is a super dovish FOMC on Wednesday. So we'll have to see how that plays out. Conversely, dollar yen really holding up its own, I think, in many ways. I've been talking about the fact that it's putting in a higher low, but really the fact that we just held 97.50 today against pretty crappy U.S. data and continuously weak U.S. Fundamentals, which probably we're going to have again tomorrow with retail sales, suggests that there is flow here on the Japanese side. That basically the yen itself is weakening more than the dollar is weakening at this point, and that is helping prop up dollar yen. Definitely do need a little bit of course, a dollar incentivized rally in order to really push it higher. 98 first level of resistance, obviously. That clears, we can come back up to 99. That is a pretty significant level. But if we sort of come back off a lower high towards 99, that'd be a very bullish W pattern. And it'll be very similar to the kind of a long-term pattern we saw here, where you have a test, a W pattern, a test higher, and then once we broke up towards the highs here, it created a much bigger leg here, about 500 points in the Aussie. So not quite similar type of a structure, but enough that if we could start to form a W pattern here, a little bit of congestion, then you could see dollar yen trading all the way up to 100, maybe 101 as the year comes to a close, on the assumption that the QE will eventually wind down and rates are going to go up a little bit. So they'll be supportive. So we'll see how that plays out. It could also be, of course, the other way. For this time being, you still do have lower highs, and if it resolves to the downside and it breaks down to the lows here below 96.50, all bets are off, and we're looking possibly for a test of 9400s. Aussie doing absolutely nothing. Where's my Aussie? It's my Aussie. Just kind of correcting off of the near-term spike highs. 97, 95.50 is the support level here. It's actually sort of, if you look at it around here, I guess 95.26 or so. But let's call it 50.26. Let's call 95.50, 9500 as key support. 9500 definitely is going to bring in some buyers as a round number. But it looks like a drip down to the downside. We have some, I think, comments today from RBA Governor Stevens. We'll see if that's going to be supportive or not. But for the time being, Aussie looks more like a sell than it is a buy at this point. And cable definitely looks like more like a sell than it is a buy. There was obviously bad weather in UK. I don't know if that had some impact on UK, but look at cable. Cable has failed to make fresh highs. We've been talking about this a long time. And again, the critical factor, if things can't go up, the natural trade is to go down because markets simply don't stand still. If the buyers can't move it up, the sellers are going to try and squeeze the buyers to the downside and see if they can push them around. So for now, 61 obviously very key support level. That gets broken, then we have a test of the 60s and a test of the 59s. It'd be a sort of a double top formation here in cable. We'll see how that plays out. Of course, again, the flip scenario, super weak dollar, we go to fresh highs, then all bets are off. We could be looking 63, 64 in cable. But for now, given the state of affairs as it stands now, cable is drifting lower and could push certainly to 6100 by tomorrow. So we'll see how it plays out. This is Boris Schlossberg from BK Forex, wishing you guys the best of luck and the best of trading over and out.